Hi, good morning, everyone. Welcome to the very first edition of Across the Counter, a series of conversations with veterans from who have seen the ups and downs of various parts of the retail value chain. Today, for our very first edition, we have a very special guest who needs very little introduction, but I'm going to try anyways. He's a second generation entrepreneur who is currently chairman of Eastern Group, one of the largest spices and condiments makers in the country. With nearly 4 decades of operations in the sector, we there's a lot that we can learn from him, and today we're going to be exploring his journey through these last 4 decades. Mr. Meeran, thank you for joining us and welcome.
Thank you very much for making me part of this wonderful initiative. We are always there with initiatives wherever handholding for entrepreneurs are provided. And we do strongly believe that that's the only way we can grow our economy as well as prosper our state's economy.
Thank you. Now, before we dive into the whole technology part of it, right? This has been noted. So you recently had a stake sale to MTR, which is a subsidiary of Orkla Holdings from Norway. And this has been touted as one of the biggest transactions involving a Kerala business house since the Chandrika Wipro deal in 2003. So I want to understand from your perspective, why is FMCG getting a lot of attention right now? Why is there a lot of investment coming
in? So you can compare our economy to that of Europe. Of course, there are brands which are spreaded throughout the country, and there are brands which have got leadership in specific geography. So, of late, in food, what people have identified is that there is every state has got a champion. So, identifying the local champion is one strategy which the food companies, the bigger companies, are trying to do. If you look at ITC buying out Sunrise Spices in Calcutta, and Orkla transaction of Eastern in this part of the country, these are all signs which says that you create a leadership position in your vertical, in your geography. That brings in a lot of interest among big companies. So, what I'm instead of spreading it too thin, if you can create leadership in the geography where you are, then that of late is showing a bit more valuable proposition than being spread throughout the country, but without having leadership in any of those geographies.
Understood. All right. Now, you joined Eastern in 1994 after your studies at a point where the company was doing around 10 crores in revenue. By around 2006, 2007, you had about 208 crores in revenue, and today the company is valued at 2,000 crores. Can you Can you go a little deeper into how technology has been a part of this growth for Eastern Group?
Yeah. So in fact, we haven't used technology. It's a confession that we haven't used technology to that extent where the growth would have, if we had used it, our growth would have been much more better, in a much more better way. The reason why I'm saying this is we of late we have used technology in sales management, and that is showing a lot of results. So, if you look at the way in which our reviews were done, it was on a peripheral way we used to do the reviews, but now we have a system wherein we can individually look at the shop performance, product-wise performance, and the coverage of the shops. If you are not attending a shop, earlier we never used to get the details about which shop has not been covered, but now all that data is with us. So that helps us in a better way in reviewing the sales management. And another area where our ERP implementation happened only after 2011. So that also has started helping us, on the management accounting side, where decisions are made not just on intuition but based on the factual figures.
Understood. So you're saying the use of technology has gone from being more of a trend analysis to finding more granular data.
Yeah.
All right. So now Industry 4.0 is a big buzzword. Everybody's talking about it. Everybody's building for Industry 4.0.
Yeah.
Can you tell us a little bit about how the FMCG sector is looking to make use of Industry 4.0?
See, automation obviously has got a huge role in any FMCG sector, be it food, be it cosmetic, any of this industry. That opportunity is very much there. In fact, I always used to quote this particular example when I went to Sweden on a CII mission. We could make out that China was ordering more than China's order book was more than a lakh of robots, whereas the Indian orders were less than 1,000. So, which means going forward, productivity obviously is going to get hugely impacted if you are not adopting much of technology. So here is the difference. One, you have to get to low cost automation models wherein your productivity can be increased, especially in food industry. The hygiene aspect can be increased in a big way. So there is huge opportunity in that area. Another area of technology intervention is that you can. There are a lot of technology help which we can take as far as grading of the product is concerned. So if you start grading your product, if say 10,000 or 1 million units are produced in a day, if you want uniformity to be maintained, there are sensors and technologies which actually rejects products which are not forming part of the normal standard. So that is available. There are n number of things which actually help us. And another area which I have always felt that has got a lot to do with manufacturing 4.0 is that you can have a centralized manufacturing review model or management model, wherein all your factories are linked to one specific place, based on the supply chain requirements. Your orders can be routed on a real-time basis rather than by the end of the month getting onto the details and then serving it to each factory. It can be done on a very dynamic model or a real-time model. So that all these things will help you produce the right product that is needed to be given into the market. Whereby this helps you improve the cash flow also.
Understood.
You're not producing anything that is not being needed. You're producing what is being needed in the market. So the money rotation happens at a much more faster pace.
Got it. Now, you had mentioned this disparity between use of robotics in China and India. Now, there's a lot of larger companies who are seeing the merit of working with startups and inculcating technology into their operations. How much of this technology are you seeing being built by foreign companies versus Indian startups or Indian companies?
See, my point here, right from beginning, is that India is a place where opportunity is there for startups who are working at the lower end of the technology as well as at the higher end of the technology, because crude technological intervention also there are takers, and that will see end of the day what is that we are looking at when you say intervention of technology. It has to increase productivity, it has to reduce fatigue, it has to be real time. You should be in a position to get to know what is happening on a real-time basis at the click of a button. This is what we are looking at. So India has a opportunity for being getting into a crude technology intervention at the lower level of MSME, and at the same time getting into the higher level of technology intervention. At the higher level, there is still a lot of opportunity, because the options and opportunities which is being given by foreign companies are not being met by the Indian company. I can tell you a classic case where there are packing machines which gives you 960 packets per minute if you go for an imported version. But in India, you get maximum 128 packs. I mean, I'm just putting some numbers to it. So that's the level of difference which we have, in comparison. So this applies in every aspect of industry. But what I am saying is, for us to put money behind these sort of a technology, what we need foolproof or trust-based or assurance-based vendors who can confidently say that we'll be able to address this particular issue. So I'll just tell you a classic example.
Sure.
Recently, one manufacturer came to us and he said, "You just put the machine there. You don't pay anything."
Okay.
And 6 months down the line, if it's working okay with you, you pay the money. So the idea is not to penalize him. If, as an entrepreneur, if in a month's time it's proven that the machine is creating positive results, I don't have to wait for another 6 months. But that is the level of trust building exercise that need to be done as far as technology is concerned. Many of the technology is just for the sake of technology. That doesn't work. You have to bring in machineries and solutions which actually gives a lot of relief to the manufacturer.
Understood. And we've seen a lot of startups which build a solution, like you said, technology for the sake of technology, and they price it really cheap, and the quality may or may not be as expected. So a lot of companies, they refer to say larger or established players who have a proven track record. So where in that balance of cost and efficiency do you think a larger company would want to engage with smaller startups?
See, end of the day, I mean, somebody who is trying to build something, he is not a lone person. He actually requires support. And we as industry, we are ready to give that support. So there, I would talk about a sustainable values. You have to be honest enough. You have to be transparent. Then what happens is co-creation happens.
Right.
So if someone comes to me and says that my forte is this, and I would like to work on it, then our experience and their skill, if we can put together,
right,
that sort of a co-creation is what industry actually requires. The major advantage is that once you create a product, then it is just the scaling of stuff. Very few I mean, you don't have to tweak it or customize it at a major level. It's
right,
hardly a tweaking that's been required based on the industry. So these are all opportunities where we feel comfortable handholding startups.
Understood.
Yeah.
Now,
And we are also ready to provide opportunity for them to come and discuss with us and understand where are we looking for a solution.
Okay. Now, what a lot of startups struggle with is after they've built that MVP, they have trouble reaching out to the right people within industry. So, for a startup where the founders might be from an outsider ecosystem, how do you suggest they try and reach out to industry? What is the most effective way?
See, the thing is, what I have seen with startups are that their go-to-market strategy. If somebody is good in technology, he will be uh, putting all his time in perfecting the product.
Right.
So what I'm saying is, if we are ready to support them, then come to us. Even if in your mind 80% of the product is ready, we'll work together and take it to the next level. So what happens is many of the startups are failing because the promoter feels like, or the founder feels like, we haven't reached the right uh, solution. So the go-to-market strategy uh, uh, need to be a bit more tweaked in such a way that you offer the product, see how it is working, then with the customer based on his requirements, you will be able to perfect it. So that opportunity as industry, we feel obliged to give it to the startups.
Understood. And would you say this is the case across various sectors?
Wherever we work very closely with startups. Wherever I have seen their go-to-market strategy is always killing those guys, because end of the day, if somebody wants to put in money in a startup, he has to see cash coming in,
Correct.
or money coming in. So the unit economics always is a uh, factor which an investor will be looking at. Then he is ready to put money behind scaling. That is not an issue for him. That is where I feel there is a gap.
Understood. Now, before we move on to the next question, I just wanted to address the attendees. If you have any questions, we'll be picking them up towards the end of the session. So please add them on the questions tab on your right. All right. Now, when you look at a startup, when a startup approaches you to, explore working with you, what are the absolute must-tick boxes that a startup should have? What are the points that a startup must have?
Yeah, to my experience, many of the technology-based startups coming to me finally end up without technology.
Okay.
So it's again mostly it ends up as an offline provider. But I mean, certain places we have helped them, we are happy with them in spite of their being offline. That's basically because we want to support these guys. But what I'm saying is, when you come up with technology solution, and if it is an online solution or high-end technology related stuff, whatever you are promising has to be delivered. So that delivery is where we find many of the people failing. So that is the reason why I said you have to stick to the core value of being transparent.
Right.
We have strength in these places. We have done this much of work. Now these are the areas which we need to build in capacity. So we probably will be able to provide help in bringing those resources and helping them out. That money we might be in a position to put in. So, end of the day, what is the ultimate objective that we are trying to achieve? The ultimate objective is to get to the solution.
Right.
So many people try to hide things. When you hide something, then we are also in dark. We don't know whether we are putting money behind the right thing. So again, I am reiterating once again, the sustainable value proposition is what startups need to have. They have to be honest and they have to be transparent, and they have to have the mindset to seek help.
Understood. And this is very interesting to me because I've met a lot of founders where they believe that they need to have a properly finished product in order to approach a larger company. But here you are telling us that co-creation is something that everybody is working towards, and that is a positive sign. So I want to understand with the whole COVID situation that's happening with the pandemic, it's accelerated the adoption of tech in many industries. Can you explain how you've seen that happening in the FMCG and retail space?
Accelerating?
Accelerating the adoption of technology.
See, obviously, now you could see I'm sitting at home and addressing this. My office has now become alternate days.
Right.
My visitors, my sales review is much more what you call uh, fruitful
Okay.
compared to the earlier scenario, because I can have a one-on-one, even if the guy is sitting in Kannur or in Bangalore or in Gurgaon, I can have a one-on-one. Patterns are set in such a way that the entire behavior pattern has changed. So technology has helped a lot. I'm telling you, certain behavior changes which has happened will never be able. It's not going. The legacy stuff is not going to come back. Even if it is coming back, it is coming back with a bit of fine tuning, which we need to. We should be expecting on. So technology has really helped in a big way. There is no doubt. People working from home. End of the day, productivity. People have started moving completely onto productivity-based review.
Got it. Okay. Now you spoke about how legacy software or legacy technology might find it a little more difficult now. So I want to understand, while there's a lot of companies who've been using legacy software for a long time now, do you think there is a resistance to change when a new startup comes in and offers a slightly better solution?
So that is the first challenge for any startup from the marketing point of view.
Right.
When somebody gets on to talk to someone, you have to start working with them.
Right.
When you start working with them, you need to appreciate what they were doing.
Okay.
Also pave way for you to gather experience on what is their need and how are they trying to address it and
Right.
all that stuff. And then in the course of interacting with them, uh, try and address the low hanging fruits. So when you start trying and addressing the low hanging fruits, there might be, I'm just putting a number to it.
Sure.
There will be some 25 issues.
Okay.
And, 18 of those issues may not take much of time, effort.
Right.
So on a continuous interval, you are addressing these 18 issues in a span of 3 months. But you're very sure the left 7 issues is going to be time taking. And it needs a lot of marketing or selling with the customer.
Okay.
But solving the 18 of the issues, low hanging fruits, your confidence has been built within the organization. So you don't have to market it. Then you become part of the journey. So that's what I feel.
Okay. So you've been very keen on interacting with startups, and you've invested in startups yourself. Now, something that a lot of investors look for in startups is extraordinary founders, right? Extraordinary people. But you've said, and I'm going to paraphrase, the success of Eastern is due to ordinary people doing extraordinary things. Is this a similar quality that you look for in startup founders as well?
Yeah, see, first and foremost, you need to create a team, the right resource to carry on with the job. So that is where many of the people have a problem. Bringing somebody into the team, finding the right resource, giving them the status of being a co-founder. All that things are definitely a non-negotiable quality that a founder need to have. So that actually increases the pace of development and pace of growth. Then what you can bring in is you can bring in people under their under the second tier and third tier, uh, you know, where they get to learn about it. They start growing, and see many of the things. My dad always used to tell me one thing that it's not the question of idea. Idea is not as you don't have a scarcity on idea, but sticking on to 4 or 5 ideas and trying and uh, building strength on that particular vertical or on that idea is what helps you get to the next level. So, for example, in our case, as far as Eastern is concerned, we always believed that direct to retail was our core area.
Right.
So anything and everything, when we think or act, it is all done in order to strengthen that cause.
Understood.
So that is what I would say.
Okay. What would you, when you're speaking with the founder, whether it be for investment, whether it be for a co-creation model, what is the one red flag or the few red flags that immediately make you not want to work with this person or this company?
I don't disrespect the ideas, first and foremost. And I do give full respect for the entrepreneur.
All right.
We don't advise.
Okay.
We share suggestions in a similar situation, how we have done it.
Okay.
Not with the same specific sort of a company, but in a different company when there was such a situation.
All
we,
right.
we dealt with it in this manner. So this actually provokes the founder to think.
Okay.
Okay, if you give advice, then he becomes a slave.
Right.
Then he will be looking at us for advice on everything. See, this advice actually becomes a spoon feed.
Right.
We don't wish to we don't wish to deep dive into that particular area. We will always be in the periphery, but we will be able to connect people who can deep dive.
Okay. So you would prefer to rather create an environment for them to explore and grow rather than apply pressure and mold it in the way you want it.
So I always have felt that two skills for a founder is one, he has to have listening capacity and the patience to listen. The second thing is, to do an analytical intervention.
Okay.
You get feedbacks from all sort of area, and based on the feedback, you probably will have some common factors to be addressed. So, high-end analytics will actually take you to the core of there is always this 80-20 proposition. 20% of the issues you've sorted out will bring in 80% of the results. So
Right.
that analytical skill is what I appreciate. I wish the founders would have in their journey forward.
Understood. Now, when a startup approaches a larger company like Eastern, a lot of their business, a lot of their technology was built on the basis of experimentation. Now, I understand that co-creation is something that larger companies are willing to, be a part of. But how much experimentation is too much?
Yeah. So what I'm saying is, if you look at the product offering as of now, I would call it. Don't mistake me for putting this word. I would call it me too.
Okay.
Somebody has been successful in running a e-commerce thing. So another guy has gone and started the same stuff, and he says that this guy got valuation of X, and we should also get valuation of this. No, but these are all issues which I don't really appreciate.
Okay.
I appreciate entrepreneurs who are actually coming into business to sort out real-time uh, issues and address the gap, and thereby, I would use the word give a positive, uh, you know, situation for the client with which you're dealing with.
Right.
It's a you don't have to be successful, and all of the entrepreneurs who come in need not be successful. My dad, even though he became successful at the age of 22, 23, but his real journey started at the age of 45.
Okay.
There is nothing like failure and stuff like that. You keep trying things because it has to be treated as a fun game.
Right.
You're trying to sort out issues. You're trying to bring in solutions. You're trying to be in business where you probably will be in a position to put your own signature there. So this is a journey. Even at I always uh, I get so inspired with Leela Krishnan Nair. His
Right.
journey started at the age of 69. So there was a classic 20, 25 years for him uh, as an
Right.
entrepreneur, even after 69.
Yes. So I think the key takeaway there is, and without getting too philosophical, is being honest to yourself. If you're doing it for reasons like money, valuation, etc., I guess in the long run you will lose interest, and you'll start doing the wrong things.
Yeah.
You do something purely because you enjoy it. I think that's something that just creates a fire right there. Now, taking a trip back memory lane, this Eastern group was founded by your dad, the late Mr. M.E. Meeran. And I'm sure he had a lot of challenges right when he started out, and you've probably seen it growing up as well. So, what do you think was one of the biggest challenges in establishing a brand and getting retailers to stock your brand? What is the challenge that you faced back then?
Uh, yeah, we have come through a very, very, it was a very tough route
Okay.
because our group philosophy was to sell on cash.
Right.
Our products, we insist that our products need to be sold on cash. So what is happening is, what did happen was, shopkeepers were not willing to take your product because
Right.
it was on cash and carry. There are other competitions who are ready to give credit. But my dad strongly believed that if you have to give 100% value in return
Right.
to all the stakeholders, right from the person from whom we buy the material to the end customer. Uh, you know that value proposition has helped us in the journey. Since we were selling on cash and carry, we give them we buy material at 3 days credit.
Okay.
3 days is for the quality check. Okay, and every week we tell a shopkeeper there, boss, don't get worried, don't buy more. You commit 100 rupees, you get 5,200 rupees turnover with Eastern. Because there
Right.
are 52 weeks in a year. Okay. You commit 100 rupees in a week, you get 5,200 rupees turnover by the end of it. So we were able to convince those guys that put the right amount into every company, every product.
Right.
That helped retailers also in a big way because they used to buy and keep material for a month.
Okay.
They get um, uh, 12 times turnover
Right.
rotation. If they put 100 rupees, they'll get 1,200 rupees turnover. Whereas we were in a position to teach them the proposition of getting 52 times 5,200 rupee turnover with that 100 rupee turnover. So, and end of the day, why should a customer buy your product? Because the end customer should come and request for the product. So, the product offering, to quote a the value which with my dad has created this organization. Our organization doesn't take material uh, from the if a vendor sends a product and if the quality is not good, We don't negotiate for price.
Okay.
So you would have sent the product for 100 rupees, and when it reaches your place, you uh, you say that the quality is not good. So then the vendor sitting in Kota, Rajasthan, he says that boss, reduce 10 rupee and take it. We will not we will not repeat it again, sort of a thing. We don't encourage that.
Okay.
If the product doesn't suit our quality aspect, product is being returned. So the beauty is that they know that if the product is bad, it will get rejected, and he will lose the transportation money. So
Right.
he is also very sure. I can also quote another example. We had a lot of issues on a video which was circulating saying that Eastern products were destroyed by the food safety authorities, and that video was going on. The fact is that when you export the product, you go give it for testing. You do internal check and you do outside check. So what happens is on the bag they write it with ink as ECPL.
Right.
When you buy products in the market, you will be buying chili, say 6,000 bags in a day or so. That is the level of. So on top of the bag, these guys will write ECPL. So
Okay.
the ink probably might go and stick onto a chili, and when
Right.
it dries, it spread throughout. So that even the trace of the material also is not being accepted.
Right.
So generally, what happens is uh, Spice Board has a policy wherein you have to destroy that product
Right.
in the presence of a third party.
Okay.
The third party is the food authority in the state level. So
Understood.
generally, what companies do is that they manage the third party, and the third party will write it has destroyed, and
Right.
this product will go into some other market. Okay,
Got it.
but as a policy, if it has to be destroyed, it is all vegetables. We are not making it in our backyard. It
Yep.
is all coming from different part of the country. So 100% of the product can't be perfect. So you have to when you grade it, you have to destroy certain product and so on. So this video recording, we did it and gave it to the Spices board, and it got leaked.
Right.
But my point here is, you show one company that is giving this, destroying of I mean, a non-usable product. You won't see it.
Right.
So, I mean, this is all policy driven. So, what I'm saying is, now if we are a 900 crore company, it is not, and we have got around 3,700 people working in the organization. It's not basically because of the charm of Navas Meeran or Amy Meeran. It is the process, the SOP that is being created, uh, which has been completely backed by value systems.
All right. Now, in your nearly 40 decades of witnessing the growth of Eastern, what is the one piece of technology that has contributed the most? The one that you absolutely cannot do without?
So now the sales review mechanism is one thing which I see. I'm. I need to confess one thing, that we haven't used much of technology.
Sure.
So if we use technology, we probably might need some 400, 500 people.
Okay.
So, uh, so that's an opportunity, but at the same time, you have to take care of the town from which you are coming.
Right.
Bring in too much of technology, then there will be job losses.
Right.
You have to. There is a fine balance which we need to.
Yeah, I'm glad you brought up that point, because one of my next questions was going to be, when do you see a day when you will operate your entire value chain without human intervention, right from farm to consumer? Do you see that day coming? And if so, how far away do you think that is?
No, it's a question of how much money you can spend as of now.
Okay.
If you are ready to spend money, then you don't have to wait for any months. In a year's time, we can do that. But in a country like India, I strongly believe we we have to make money. People around has to also make money.
Right.
There should be a equitable distribution of wealth in the society. So it's a that's the reason why I said it's a fine, well balanced stuff which we need to operate.
And
It's not end of the day. It's not just money alone.
true. It's about the people.
Yeah.
Yes. And speaking of which, we have some questions coming in from our attendees today. So Thompson would like to know, when building trust is key, the cost to build trust is time, the most expensive resource for startups. Is there a framework you have in mind to help establish trust in a time-bound manner?
Can you repeat?
Sure. When building trust is key, the cost to build trust is time, the most expensive resource for startups. Is there a framework you have in mind to help establish trust in a time-bound manner?
Yeah. So I fully agree with the fact that the cost of building trust is, it obviously will be uh, uh, more. The only way we can reduce the time is by being transparent.
Okay.
And, see, end of the day, see, what I always have felt is that we feel as an entrepreneur, you have answer to everything.
Right.
The fact remains that there is no answer to everything. So you have to admit the fact that you are a specialist in one vertical.
Right.
There are n number of other verticals where the person sitting on the other side, uh, obviously will have a solution.
Right.
And you should be in search of solution from people with experience. So if you're giving a B2B solution, the B2B guy obviously will have lot of exposure, experience dealing with people, and he obviously will be in search of many of his issues, answer for many of his issues. So being a good listener, being a person who admit that this is the way we are operating, you have any suggestions, we are ready to incorporate that, then that paves way for co-creation.
Right.
And I'm telling you, if you look at most of this German, I'm sure people would have read about Made in Germany, the science behind Made in Germany.
Yes.
Was that it was completely industry driven. It was
Right.
completely industry driven.
Got it. So I think the key takeaway.
I'm sorry. Did I answer the question? I'm not sure.
I think yes. And if I had to sum it up in one sentence, be transparent to reduce time. I think that's the big takeaway there. All right. Now, Girish would like to know. Girish says, I believe big time in co-creation. So far, all our product offerings were part of co-creation only. What is the best way to reach out to you? And would you be open to discuss our major problems, not machinery, so that we can see if we can solve?
Yeah, anytime.
Okay. And he also wants to know what would be the best way to reach out to you.
It's navas@eastern.in.
Okay, there you have it. And how is the COVID-19 situation affecting your manufacturing units? Are you facing return to work situations?
Yeah.
And is that something a startup could be solving?
Right. There are solid issues because of there is no framework. Everyone takes their own decisions. The collector of Ernakulam doesn't take a call in the same way that the collector of Idiki does.
Right.
I mean, you can't blame them because the situation is such that they have to make sure that the spread is being contained. So there are issues. We have had factories shutting down for 7 days, in certain cases 3 days, in certain cases 14 days. So it happens.
Okay.
Startups, I don't know. Startups, because since we deal with huge volume, a startup may not be able to step up to that sort of a level.
Understood. Now, we have another question. This is regarding reputation risk. Does reputation risk affect the valuation discussions with investors? How did you address this as a representative of the founding team?
See, reputation risk. If you really look at, uh, we were the first organization to add an impact of social media, negative publicity. That was in 2011.
Right.
So right from there, some people, they obviously, everyone doesn't work in the framework of ethical business practice. So some
Right.
of the people used to instigate. Still after 9 years, still that product destroyal for videograph used to come. So it's being done by somebody who is intentionally doing it. Uh,
Right.
I mean, you can't blame them. It's like, I would say that to have a perfect sleep at 10:30, if you have to sleep, and in 3 minutes you have to, at 10:30 you get onto the bed, and in 3 minutes if you have to sleep, your mind has to be uh, what you call uh, at peace,
Right.
at calm. So if you don't have anything to regret about, or if you are not part of a continuous improvement team, or if you're not part of a continuous improvement mindset, then you have it.
Right.
Then you will lose sleep. Because here, what I'm saying is, 3,700 people are working in an organization. My intervention is only in the what you call head office level.
Right.
I'm not going and grinding the chili. I can't put product based on my vision with, because
Right.
there is an SOP which is being created, and based on that it works. So if you overly get worried about reputation, there is nothing that can happen.
Okay.
There is one thing which is very clear. Uh, any mistake which is humane, it will happen. So wherever you have a human intervention, wherever people are careless, things can happen. But how do you reduce it? You
Right.
reduce it by way of telling those guys that ownership is not for the Meeran family. It is
Right.
everyone put together. If a factory doesn't work in Theni, I'm sure 800 to 900 people will get impacted. So, I mean, it's not just, if it is just for me and my family, we don't need these many facilities, these many factories. You only need a very minimal amount for survival.
Right.
So, reputation management is completely based on the values.
Understood.
What is that value you are upholding? You have to be honest. The integrity has to be strong. End of the day, what is that the end customer requires? If the end customer requires organic product, you have to go and give organic product.
Right.
But the question remains that I see everyone talking about organic. You go to a store where one SKU is 100 rupees, which is organic. Another SKU is 60 rupees, which is non-organic.
Okay.
99.9% people will pick 60 rupee material.
Right.
But in a deliberation about the pesticide and stuff like that, they will say they want 100% perfect.
Right. So I think two things I can take away from that is whatever you do, optimize for peace of mind. I think if you put that at the forefront, you'll automatically do things that are right.
Can
And
I use Malayalam a bit?
please, yes,
നമ്മുടെ കാർന്നുമാര് പറയും അടയ്ക്കയാണെങ്കിലും മടി വയ്ക്കാം, അടയ്ക്കാമരം വയ്ക്കാൻ പറ്റില്ലല്ലോ.
sure.
Yeah.
And I think one more thing that you've noted here was founders have to be good at dealing with uncertainty. Because, like you said, right, you can't always keep your mind on protecting your reputation 100% of the time because there will be things out of your control. So I think dealing with uncertainty is a little more important skill there.
I can also put you another case.
Sure.
You know, in Europe and US,
Okay.
Activist shareholders are there. These guys will buy one share, and they will they will go threadbare through all the uh, uh, financial accounting and come in for the AGM and screw the happiness of the promoters. So, so we worked very closely with McCormick. McCormick is a New York listed company.
Right.
So they say that they're so very cautious.
So I think, yeah, that's something that you can't always just keep a tab on. So I think we're getting near to the close of our time. And I think we've got one final question, which is the perfect way to end this session. What next, sir? Are you going to actively participate in policy formation, startup accelerators, or incubators so that there is a streamlined manner in which startups can benefit from your experience?
No, we haven't. I'll give you a small brief about the transaction. Uh, we have diluted 41% in the company, and now we are at 33%. Our residual stake is 33%.
Right.
One and a half, 2 years down the line, it's going to be a merged entity, wherein we'll be a 10% stakeholder. We are running this part of the business. Eastern part will be run by us.
Okay.
So at least for 4 to 5 years time.
All right.
And on the other side, our non-curry powder division, we have brands like Easty.
Right.
Then we have Sunidra mattresses.
Right.
We are into rubber-based initiatives. We also are into affordable housing under the brand name Nanma Properties. So this is a non-curry powder division is close to 500 crore turnover. So we have enough of area to work and take those organizations to the next level. On the startup side of it, we have under my dad's name, we have a organization which is there to handle the entrepreneurs, startups, by way of seed funding, by way of experience sharing. We are there with the startups, and we strongly believe that my dad, in spite of his lower level of education and stuff like that, it was basically because of the help of people around. He emerged as a strong entrepreneur. So I feel one as an individual may not be in a position to take any organization to that next level. He definitely requires the ecosystem, be it political, be it community wise, or be it family wise. That handholding has to be there. Otherwise, no one. It's humanly not possible to take any organization single-handedly to the next level. People feel that if I have money, I'll be able to do everything. It's not the fact.
Right.
It's the overall ecosystem that drives entrepreneurship, and we are there to support that.
Thank you. Thank you so much. And on that note, we are going to be closing out today's session. Thank you, Mr. Meeran, for taking the time out and sharing your insights with us. We've had a wonderful talk, and thank you to all the startups who joined us as well.
Hope I have done justice to the time.
Absolutely.
Thank you.
Thank you, and goodbye. Have a nice day.